Mulham Trading just commented on my last video and wanted to be next in my quest to find the best trading strategy on YouTube. So we'll quickly backtest this strategy and I'll show you how you can make it even better using your trading journal, which is what I specialize in. In addition to subscribing, which I think you should do too if you want to stay up to date on requests, he also said that he doesn't really believe in mechanical strategies. I really appreciate the support, Mulham. I love what you're doing for this community, but I'm going to prove you wrong today. Mechanical strategies is a game changer and has been for many of my students. Let's go over the rules. To make it more efficient for you and not to waste your time, I'll show you directly all the trades that I could find during the month of February using these rules. That way we can get faster to how I would improve the strategy, the results, and how I would journal it. This will happen either during the London kill zone or the New York kill zone. And since I'm only trading the New York kill zone in my own trading, I'll start with that. So from 7 a.m. to around 10, 11 a.m. Let's be flexible. And I will then show you one very powerful thing you can study which will make the biggest difference in your results at the end. So you can study in your journal. The second thing is we will stay only on the 15-minute time frame. So very interesting here, very different from what I usually do in my other videos. So I think you can get a lot of knowledge from it. Then we'll wait for a sweep of liquidity. We'll wait then for a break of structure on the 15 minutes and use the OTE. And then finally, in his video, he was going with different take profits. But since I usually like to take one single take profit and not play too much with my trade, I'll just take profit at the 62 fib every time. So I'll show you an example. And as always, any likes or comments is really appreciated and really helps my channel. Thank you very much. All right, so this is nice. At the very start of the New York session, we took out some lows. We had a break of structure. And what I like to see with this strategy, and that's the tip I'm giving you personally, is if you see a displacement having a fair value gap, this shows that it's a very powerful displacement. So this is what you're looking for. So we have one here. So I'm just putting my entry at the 62 and then going for the 62 extension. Let's see if we get an entry. As the move goes, I need to adjust my fib because the leg was not finished. So in your day-to-day trading, this is something you can also do because we never know when the leg finishes before putting the fib. So you can just adjust as it goes. All right, so we had a nice reaction almost to the stop loss. And then I take profit. Look how interesting this is. We stopped exactly at the 62, at the minus 62. So always a good place to take profit. Let's go to the next day. So the main ideas that I took from Mulham is to use the 15 minutes, wait for a sweep of liquidity, which is very classic in SMC and ICT concepts, and then use the OT. So once again, here you can see that this small high was sticking out during the New York session. We have this small low that was sticking out also, and I consider this move to be very aggressive since it formed a fair value gap. So what I'm expecting here is to have a comeback to the 62, hopefully, and then it goes to the take profit. Let's see. Alright, so unfortunately in this case, we failed at the fair value gap, so that's pretty sad. But if you like using the fair value gap as your entry, you can of course also do that. You can also study your stop loss placement. And you can see here that we never broke above the fair value gap. Maybe that's something you can study. You don't need maybe to cover the high. Alright, so right there, we took out the 2 days low. And then we had the beginning of a strong move, leaving a fair value gap. So let's just put the fib and see if we can get an entry. As the move is going, I need to adjust my fib. Alright, seems like the move is done, so I can now put back my order. Alright, so nice one, but this one's a stop loss. Also, what's very nice with this strategy is that since we're always going for minus 62 extension, it gives a good risk to reward. So even if we get some losses here and there, overall, it will be profitable, especially with what I'm going to teach you at the end. Alright, so once again, we had the sweep of liquidity. We have a clear leg that's forming, leaving some fair value gaps. So I can just put the order at the 62 and hopefully get a trigger. Alright, see here again, we failed to go to the 62. We just stopped at the 50. So that's again something else that you can study for yourself. Alright, so we have a very small high that was sticking out here, leaving a fair value gap. So once I saw the fair value gap, I knew that something happened and there was a sweep of liquidity. So I just drew the leg here, and then let's see if we can get an entry. Let's adjust the fib because we got some price action. Alright, so beautiful reaction at the 70. Let's check if we can get a take profit here. Let's just make sure I have the take profit at the right place. Alright, beautiful. We're now at +6. So we had a nice respect of the order block and fair value gap. We had a small sweep of liquidity. Then we can just put the order at the 62. Nice reaction. And I take profit. So we're at 9.5% in profit just around 2 weeks, so that's pretty nice. We had a sweep of the high. There's a fair value gap. Once again, we filled up the fair value gap, reached to the 50 fib, and then continued lower. So it seems like using the 50 fib instead and maybe using the high of the fair value gap could be very interesting and yield some good results. We eventually went back up, but we're too close to the 12 p.m. Alright, so we got a sweep of those lows, and then a very nice reaction from it. So nice execution, but a stop loss. On to the next. So we had a sweep of this low, giving a very nice fair value gap. The entry at the 62 is exactly at the point where there is an order block. Let's adjust the fib. So we're a little bit in profit, but eventually went for a stop loss. So we took out those lows. Had a quick push, a breakout structure. Once again, we filled up the 50 fib. So if I had to redo this backtest, personally I think I would always go with the 50 fib instead and maybe cover the stop loss, not necessarily at the low, but on the other side of the fair value gap. I would actually be very interested if someone could do that and then post your results in the comments. We took out slightly this high and I had a fair value gap. Alright, so I just had to wait for the leg to finish, then I could set the fib. So it went pretty deeply in profit and eventually went to stop loss. So we finished the month of February with around 6% in profit, which is very nice. But there is one thing I would suggest everyone to study which could make those results even better, and it's the London trend, especially for New York traders. What I would do with this strategy is to note whether we traded in the same direction as the London session or against it in my journal. And based on ICT, when we're trading the New York session in the same direction as the London session, it dramatically increases our win rate. But there's only one way to convince yourself, and it's to study it. So in my journal, I would have an entry studying if my trade was with or against the London session. And once you have enough data, you'll be blown away at how this affects your results. Also, if you want more trading journal tips from me, you can apply to my mentorship in the description and also watch this video. See you next time.